Minute, July 22nd, Wednesday. Good afternoon. So today's mortgage market is a perfect example of why rates are not moving in a straight line right now. Last week we got some good news, but inflation finally cooled. CPI came in a little lower month over month, and PPI, wholesale inflation, also dropped. This gave the bonds some relief and helped mortgage pricing improve for a short window. But today, the market is being reminded that oil is still a wild card. The 10-year Treasury, however, is hovering over 4.65% range, and oil prices have pushed higher again as tensions around Iran continue. That matters because higher oil can feed right back into inflation through gas, shipping, transportation, every good day news, and energy costs. So the market is basically saying, yes, June inflation cooled, but what happens if July inflation heats back up again because oil is rising again? That is why mortgage rates are still under pressure, and we are seeing this in the mid-upper sixes range, depending on what type of loan type you're doing, credit score, down payment points, and lender pricing. So some daily averages are showing small improvements, but the overall theme is that we're elevated volatility. We have elevated volatility. So the reason is simple. Inflation data helps rates. Oil prices are hurting rates. The Iran situation is creating uncertainty, and the Fed still does not have a clear reason to start cutting rates aggressively. Okay? Basically, war bad, rates bad. War good, rates good. That's kind of how we're at the moment. Another update from the past week is the housing bill. The 21st Century Road, the ROAD to Housing Act, became law even though President Trump refused to sign it. He allowed it to become law without his signature while pushing for movement on the Save America Act first. For housing, this bill is aimed to increase supply, speeding up certain approvals, supporting manufactured housing, and limiting some large institutional investor activity in single-family homes. So in large institutional facilities and can't invest into single-family homes. It's a great thing that people were looking for, and something that I think is going to be really supportive to homeownership. Will it fix affordability overnight? That's not the case, but it does show that housing affordability is now a national issue that both sides are being forced to address. So here's a takeaway for buyers and realtors. Last week's inflation data helped. Today's oil and Iran headlines are pushing it back. Now, rates are still headline driven, and windows of opportunity can open up but close very quickly. If you have buyers in this market, make sure that you are fully pre-approved, understand their payment, and ready when pricing improves. This is not a market where you wait for perfect conditions. You don't wait for perfect conditions. This is a market where you stay prepared and take advantage of the right window when it comes open. That is your Mortgage Minute for today. Please feel free to join us Power Prospecting on Mondays in Redondo, and then we have switched over to appointment-based funnel Fridays. So if you'd like an appointment with me, side by side, so we can work on your website, landing pages, CRM, email drip campaigns, Google ads,